So no doubt over the last few weeks, you've realized that the US has launched an all-out attack on crypto. And the attack is very much an attack on crypto and probably not that much an attack on Bitcoin. And the reason why they haven't attacked Bitcoin is simply because they can't, because there is regulation on Bitcoin and Bitcoin isn't regulated under the SEC. And right now the US is using the SEC as the weapon to regulate crypto. But what we're seeing when it comes to Bitcoin is we're seeing that Bitcoin is holding around 26,000, but it's decorrelated from the NASDAQ and from many other markets in the middle of a big bull run. Now, the big question is the market going to realize that this is not really an attack on Bitcoin? And is the market then going to start following the NASDAQ, which is on this bull run? Or is the US going to expand its attack and actually start attacking Bitcoin next? That's the big question. And today, I've got a very, very, very big guest coming here. It's a Friday Banter, so I've got a big guest here on the Friday Banter. I've got Michael Saylor. And we're going to talk about all things Bitcoin, but mainly I want to dig into this attack on Bitcoin. So listen, it's going to be a massive show. Glad to have Michael here. Let's go, 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 go. And we're back on a Friday. It's our Friday Banter. It's a massive Friday Banter here with Michael Saylor. We're going to be talking about all things Bitcoin, crypto. I want to talk to him about ordinals. I want to talk to him about inflation. I want to talk to him about the Fed and whether the Fed's hiking cycle has really ended. I want to talk to him about de-dollarization. I've got a massive show planned here with Michael Saylor. But before we get into the show, into the meat and potatoes of the show, just a reminder that if you haven't already subscribed to our channel, subscribe to our channel. You're really, really helping us. And we have become the fastest growing major channel in crypto in this bear market. Believe it or not, we are the fastest growing. Also, if you have been here for a while, just smash the like button, give us some love, because that gets distribution of our content. And also, I just want to thank our sponsors again. And I think by now you know that our Friday Banters are actually sponsored by NordVPN. And if you're not using a VPN now, you're crazy, especially now with all this these regulatory attacks. You want to keep your IP address masked, because remember, every DeFi protocol, every exchange that you interact with, every web app that you interact with knows exactly where you are. They know exactly which country you're in, and they're gathering this data. What you want to be doing is you want to be masking your IP address. It's just safer. It keeps you much more anonymous, and you can do that for $3.35 a month. All you do, there's a link below. Hit that link below, give our channel sponsor some love, and at the same time, it helps us bring these shows and you protect your crypto. So listen, let's get the show on the road. Let's not waste any more time. I've got Michael with me right here. Michael, welcome, my friend. Nice to see you again.
Yeah, thanks for having me.
I guess the last time I saw you was at Bitcoin Miami. You were very, very, very busy. And I think the biggest fight that we had on our hands there was whether ordinals was a good thing or a bad thing. I think that was like the biggest fight. And then as we left Bitcoin Miami, it seems like the SEC continued with their all-out assault. But I think that the assault's on crypto, or certainly the read that I get is that the assault is on crypto, not that much on Bitcoin, right? What are your thoughts there?
Well, I think there are a lot of interesting ideas in the crypto community. So is the creation of a cryptocurrency like a stable coin, like the US dollar or a digital yen or digital euro. A third idea is the creation of a digital security, where I just want to create a security much faster. And all these digital things, we're trading 24/7, 365 programmatically. That's the fourth idea, digital exchange. The fifth idea is a digital token, like a Tom Brady token or a Crater token or Katy Perry token. And if Madonna wants to monetize her brand via a token, that's an interesting idea. You know, another idea is derivatives, right? Like perpetual swaps, you know, and these are fairly innovative. Like they don't have an equivalent in the 20th century analog world. And then I guess the final idea, I'll combine them. One is global assets, borderless transactions, and then beyond permissionless, we'll call it. And then the last idea is self-custody. The idea that you could custody your own asset, whether it's a token or a security, there's no way to self-custody your Apple stock, right? And it's not practical to self-custody a bunch of gold, not really. So these are all the interesting ideas. And and I guess the last idea is like DeFi, like basically real-time trading, non-KYC via smart contract. Okay, all interesting. Now, the history is full of interesting ideas. Some of them are successful, and some are embraced politically. Like you remember trade sports? It used to be you had these offshore betting markets where you could bet on anything. You could bet on the weather, right? And you could bet on which political candidate is going to win, and you could bet on who's going to get the nomination for the Republican Party. And it was really fun, and the politicians hated it, and they shut it down. And there's a few places in the world where you can still do it, but another interesting, fun idea is betting on sports, right? You're in an amphitheater, there's a basketball game going on. You get to bet on who's going to be the high scorer. And if you could do that with your smartphone in real time, or you could bet on whether you're going to make fourth down, right? In a football game, it'd be really fun. But there's this thicket of regulations that slow you down. Even when they make it legal to bet in one place, like there's another overarching regulation from a different agency that prevents you from doing it. So those are all the ideas. And it's a brilliant, beautiful idea. If we had a progressive political system where you had progressive laws and progressive regulators, they would provide you with a legitimate path to register and issue a digital currency, register and issue a digital security, register and issue a digital token, register and issue a digital commodity, register, regulate, run a digital exchange, right? All of those things. And that's one future. There's another future, which is the political system isn't very comfortable with some of those ideas. So what is it comfortable with? Well, if it's an asset without an issuer, if we can't trace the company or entrepreneurs to it, if nobody controls it, and Bitcoin is the greatest example of that, we call that a digital commodity or a crypto commodity. We're kind of comfortable with that as long as you hold it in a place we understand, you pay your taxes on it, it's clear, where it is moving. If you want to own $1 billion of gold, okay. If you want to own $1 billion of Bitcoin, okay. Now, when you start moving that at high velocity, non-KYC, like, in my company, we're trying to figure out, can we just issue Satoshis as a reward for you showing up to the Zoom meeting on time? And the lawyers go, well, if you issue a nickel worth of Satoshis and it's related to your job, then it might be a taxable event and we have to file IRS tax forms with it. So we're like, I can't even issue a nickel. Well, you can issue a nickel of Satoshis if it's not related to the job. Like if you did something over and above the job, you can issue the nickel, but if it's related to the job, you can't. So what you've got crypto commodity as a store of value. It's an institutional safe space, right? That's kind of a safe harbor. I know how that will be taxed. I know how that will be regulated. You want to buy it, you want to sell it, you want to hold it. Okay. So when the regulators say, okay, Bitcoin's a digital commodity, when Janet Yellen says, it's a digital asset, when they say it's a speculative, volatile digital asset, what they're saying is, as long as it's scary and volatile and it is legitimately an asset that no one can manipulate, well, whatever, you can do what you want with it, but just pay your taxes on it and report it. Now, we get to the other ideas like stable coins. Well, if you look at the Paxos lawsuit, the Wells notice, if you look at the Custodia denial letter, if you look at most of the legal case law that's come out, it's very clear that the banking regulators aren't comfortable with millions of dollar digital assets that amount to large amounts of money trading in dark pools, non-KYC at high velocity. They just don't like that idea. Hence, Silvergate doesn't get political support. Signature doesn't get political support. Custodia wanted to issue an 𝗍𝗏𝗡. There would be a stable coin backed by dollars and an FDIC regulated institution circulating on Ethereum. They did, and if you read the denial letter, it's 75 pages long. It's not 50 pages of bickering about fractional reserve banks or non-fractional reserve banks. It's pretty much a nonstop rejection with prejudice of the idea that you should issue a stable coin that will circulate non-KYC. The idea being maybe $1 million of that's going to go to a sanctioned entity in Russia and Iran, in some place we don't want to do business. Ron, I have a free education site, Saylor.org.
Yeah.
We give away free education. Okay, are you ready for this? It's illegal to give away free education in Iran, to Iran. Like, we can't even provide
to Iran. Yeah.
Yeah, you understand, to Iran. Like, we can't even provide like free calculus, right? Like, there are certain sanctioned entities where, like, my company can't sell software to sanctions entities. We can't give away free stuff or services, anything of value. So you can imagine, if they don't want you to give away free algebra to a sanctioned entity, they probably don't want millions of US dollar stablecoin to circulate. So that idea.
But hold on, Mike, what's the difference between millions of dollars of US stablecoin circulating and millions of dollars worth of Bitcoin circulating? It's probably as easy to move Bitcoin as it is to move the USDC. What's the difference to the regulators?
Well, I think at the end of the day, they're going to be comfortable with low velocity Bitcoin held as a store of value property, right? They're not going to let Cash App, send a Lightning transaction to Iran, right? So regulated entities are still going to have the same issue, and I think that a couple of the differences are everybody wants dollars. They're afraid of sometimes there are two things that Bitcoin doesn't have that people in the crypto community claim to have fixed. Bitcoin's not totally private, right? It's a public blockchain, so you can see the transactions on the public blockchain. And Bitcoin is volatile and unpredictable. So if you fix that by creating a stable coin, which is non-volatile, and then you move it, and the third is kind of slow, but if you move it fast, if you move it privately, and you move it stable, you just fix the defect, but that makes it highly desirable. And so it's too good because now it competes with the US dollar, and sometimes you don't want to be that good, right? It looks like currency as opposed to property. Right, coming back to this issue, right? Is Bitcoin money? Is it currency? It's not really currency because every time you move Bitcoin, it creates a taxable event. It's not legal tender. Whereas a dollar is currency, so you can move it 100 times a day without generating 100 taxable events. So in this particular case, what I'm getting to is there's not a lot of political support for digital currency right now. A year ago, 2 years ago, it was less clear, but certainly all of the actions over the last 6 months indicate that there's a rejection with prejudice of the idea of digital currency. And, if you're looking for examples, the Paxos Wells notice, the Custodia denial letter, the shutdown of Silvergate Bank, the shutdown of Signature Bank, and the rejection of stablecoins on the Canadian exchanges, that's 5 data points. You can draw a line between that. And the conclusion that you come to is it's not welcome. Now, there's 2 reasons it wouldn't be welcome, right? I'm not telling you, I'm not making a judgment whether it should or should not be. If you'd asked me 2 years ago, I would have said, hey, stable dollars as digital currency could circulate in volume trillions and trillions of dollars. It's good for the US dollar, good for the world. But the point is, it's above my pay grade. I don't make the law and I don't run the regulator. So here's why, if I'm trying to figure out why the regulators would be against it, here's the 2 reasons. One, because I can move $100 million of US dollars in a split second to a sanctioned entity, whether it's a Russian entity or an Iranian entity or someone on the sanctions list. They don't like it for that reason, because currency is in addition to be a medium of exchange, a unit of account, and a store of value, it's also a system of control. Okay, and so we're evading that control. That's KYC, counterterrorism, know your customer, all this, et cetera. So That's one reason they don't like it. There's another reason they don't like it. You remember when Do Kwon issued $20 billion of UST? That was backed by Luna. And then you've got another view, which is, okay, well, I've got a stable coin backed by US dollars. But, we don't know whether you've really got the dollars or don't. But here, I can be creative. I got an idea for you. What if I issue $100 billion of stablecoin backed by Russian real estate? What if I issue $100 billion of stablecoin backed by the Argentine peso? What if the Chinese issued $1 trillion of US dollar stablecoin backed by Himalayan real estate or the CNY? Yeah, so that at this point, if you're a financial regulator in the banking system of the Western world, you start thinking, well, if I can issue it against like a Luna coin, a crypto token, I mean, a better idea is, why don't I just issue it against Brazilian rainforest real estate? And what if the Brazilians issue $250 billion worth of stablecoin? Now, and that, by the way, I hadn't really thought a lot about that, Ron, but if you read the Custodia denial letter in detail, all 75 pages, you see what they say is, we don't want the stablecoin circulating backed by FDIC because you might issue a lot of it. And we know you can't figure out who the 9th, 10th, and 11th holder of it will be because it'll be non-KYC. And then the third thing is, we don't want you to inspire a foreign bank. They mention a foreign bank. Like, okay, well, maybe the UAE just issues their own stable coin, but where does that stop? I mean, what if the Iranians, decide they're just going to issue $500 billion of US dollar stable coin backed by anything, right? And so you can see that they don't really want that. And that's the problem with the stable coins right now.
Okay, so I hear you. Let's put aside stable coins. Okay, so that idea, I kind of understand why the governments don't want. They don't want, for all the reasons that you've said, and also probably because they want to launch a CBDC at some point. And, all these US dollar denominated stable coins probably just get in the way of that. What about the rest of the ideas? I mean, let's work through some of the other ideas and just see, where this war is actually, what this war is actually targeted at.
Yeah, I think it's very constructive. I mean, one of the challenges in the debate is there isn't a lot of well-structured articulation of what the crypto industry is trying to accomplish, and there isn't a well-articulated rejection of the ideas. The rhetoric sometimes boils down to just talking past each other. Let's talk about digital securities. So, first of all, Apple is a registered security. Microsoft, right? They're actually registered securities, publicly traded. MicroStrategy is a publicly traded security. Binance once listed MSTR stock on a crypto exchange. It was delisted at the request, I think, of the German regulators. Okay, and so think about that for a second. One world would be 20,000 publicly traded companies like Apple and Microsoft can be traded on Saturday afternoon on a crypto exchange in India between a Chinese national and Indian national. Okay, well, would that be good for the world? Yeah, I think it's good. It's good for the world. If 8 billion people had access to trade securities, right? If you live in Africa, how do you buy Apple stock on a Saturday afternoon? Okay. And more to the point, how do you take custody of Apple stock on an Android phone, right? So here's one very progressive idea, but then again, who's disenfranchised? Like all of a sudden the big banks, they don't have a monopoly on trading securities. So the trading goes off of NASDAQ, off of DTC, off of the big banks, the JP Morgans, the Bank of Americas, the Citigroups. So the entire Wall Street establishment maybe isn't that enthusiastic to see billions or tens of billions or hundreds of billions of dollars of public securities trade on a crypto exchange digitally.
Doesn't it make it more competitive in the long term? Because now you've got US companies able to attract capital from the likes of Africa, India, Brazil, which you've just spoken about, on a Saturday afternoon trading equities. Does that not make the US more competitive if there's more demand for US companies?
Oh, yeah. I'm a technologist. I think it'd be very progressive. Like, it'd be a good thing for the world, right? If you believe in self-custody, then it'd be nice if you could self-custody just about anything, right? Self-custody your bonds, self-custody your ETF, self-custody your Apple stock, self-custody anything. But my point really is there's no one in the crypto industry asking for this, right? The better argument would be, hey, why don't you actually let the crypto exchanges trade Microsoft and Apple stock, right? I mean, that's the question that should be asked to the regulators in congressional hearings, right? Wouldn't the world be a better, because the dynamic has devolved down to 𝗏𝗏 wants to issue his own thing and we want to trade it. And the regulators say, well, 𝗏𝗏 maybe is manipulating the price of the unregistered security of the FTT token, and that's really not what we want the public to get. So digital securities are a good idea, but there's no real debate, and there's no path. Like if I wanted to list MSTR stock on a crypto exchange, there's no way to do it, right? There's no way to apply for anything. So it's not an issue of making the disclosures. There really isn't a definition of it. The definition of digital security is defective, right? Yes. And so really someone needs to say a digital security is an asset which you can take self-custody of, which can trade 24/7, 365 programmatically. And now you get to the question of, well, I want to issue a digital security in the form of a stablecoin token, or maybe I want to spin up my own, Solana or my own Cardano token. And look, there's people behind it. We made an investment in it. Algorand, there was an ICO. If there's an ICO and you've got a group of entrepreneurs and they're raising money, okay, well, it's not unethical to raise money. It's not even illegal to raise money. It's not illegal to be aspirational about creating a great thing. MicroStrategy raised money with an IPO, and we used the money to build stuff out. The debate is how much disclosure needs to take place, and then what's the process for doing it. Now, in defense of the regulators here, I've run a publicly traded company since 1998. Okay, so I have a lot of experience. I will tell you, we have an army of lawyers, an army of accountants. It's really hard to disclose the financials and disclose the nuances and the risk factors. Like literally there's thousands and thousands of, probably 10,000 pages of disclosures. And it's not just like, you can't just say, this is what I think is the truth. You actually have to say, this is what I think is the truth. Then one lawyer writes it and puts the comma in the right place. And then an army of 4 other lawyers look and say, well, you left out this and this and this and this and this. And then the accountant says, well, actually you miscalculated that because of this and this and this. And after you've gone through 6 iterations, and Ron, I think we probably spend $25 million a year figuring out how to tell, just on the disclosures, maybe more, right? Just figuring out how, read our 10K, read the 10Qs, read all this stuff. It's very...
$25 million a year since you took on Bitcoin, or $25 million a year before Bitcoin?
No, $25 million a year is just what is like the minimum a public company just has to actually spend on lawyers and accountants just to stay current with the disclosures. So it's very complicated. Look, it's $2.5 million a year just for the accountants. Okay, that is absurd. Millions and millions of dollars a year. Okay, so it's not easy, right? And so, of course, on one hand, if you're an entrepreneur, you would say, well, look, I mean, I kind of want to issue Tom Brady token, and I want to give 10,000 Tom Brady tokens out to my 10,000 super fans, and I don't want to spend $25 million a year, right? I shouldn't have to spend as much money as a this is $25 million a year for a $500 million revenue company. If you were a $5 billion revenue company, they're probably spending $100 million a year, right? And hundreds of millions a year. So on one hand, you have the entrepreneurs saying, we want to raise capital quicker. We want to fast track a simple way to do it. And then you have the 20th century way to do it. So what you have is you have tension between the 20th century analog establishment, where everything is just very expensive and very cumbersome and very slow. And so after I spend all that money, the $25 million a year, I still can't sell my stock on an international crypto exchange, right? So you spend my stock trades on NASDAQ. You know how long it's been traded on NASDAQ? Since 1998. You know how much competition there is for other exchanges for the stock to trade on? None.
None.
Okay, none. And you know what's changed or what's different about my stock trading on NASDAQ since 1998? Nothing. Okay, so you have the 20th century establishment. There's a certain way that you do this. It's very cumbersome. It's slow. And then you have a 21st century idea. And it's a beautiful idea, a brilliant idea, which is, wouldn't it be great if it was 1,000 times quicker and 1,000 times cheaper to do it? But there's no articulated taxonomy. There's no definition of the difference between a digital security and an analog security. Yeah, in all these congressional debates, you don't even have people debating the difference. Have you noticed they just refer to them as securities, and no one has debated, is there a difference between Solana as a security and Apple stock as a security, and should there be a difference?
I get what you're saying, but for both examples that you've spoken about, the stablecoin one and the securities one, you're coming back to the same thing, and that is that regulators are moving too slowly, that the incumbents are slowing down the process because there's no incentive for them to change anything because they're very happy the way that it currently is. Surely that's not a way to run a business. And I refer to the country as a business here. Surely that's not the right way to do it. And surely that's not going to keep the US the most competitive technology nation in the world.
Yeah, this is above my pay grade, right? I don't run the country. And so we have to keep that in mind, and nor am I the head of the Financial Service Committee or a senior politician. But if I was trying to do the best thing for the world, let's forget about the U.S. I mean, look, the best thing for the world, the best thing for the U.S., I think they're the same, but let's just say I was trying to do the best thing for the world. Well, the best thing for the world would be if you defined a digital currency, a digital commodity, a digital security, a digital token, right? Even a digital art. A digital token might be fungible, like Tom Brady token, 52,000 super fans. And digital art might be Tom Brady's one and only portrait. He's going to pose topless once in his life, and he's going to sell that online, right? Digital art. If you defined all those terms, and then you defined a digital exchange that traded all those things, and presumably a digital custodian that could custody those things, then if you're in a country, if you're running the country, you actually lay out a set of rules in that country. This is how you register and get and issue a approved digital token, digital commodity, digital currency, digital security. These are the rules. If you're going to, for example, issue a digital currency, like we've got them, a stable coin, you can do it, but A, you have to disclose every week. B, you can only back them with maybe sovereign debt. You can't back them with Siberian real estate or yo-yo tokens. And C, you can't take on other leverage. You can't rehypothecate them. And D, these are the controls you have to have or not have, right? I mean, is it going to freely circulate or not? So those would be the rules, and that will be the political debate. If you go to digital currency, digital securities, you would say the same thing. You would say, if you want to issue a digital security, these are the rules, these are the disclosures, right? And now the issue is, are they the same disclosures that Nike has to make or Apple has to make? Are you going to create a fast track, different definition or not? Well, one can imagine that the disclosures that General Electric, the conglomerate, has to make would probably be a bit deeper and more nuanced than the disclosures of a utility token, operating on a whatever network. So you would create that, and then you would have a path to register, and then you would have securities laws that control. And if someone lies, I mean, the real issue, let's take Tom Brady token. The real issue is, should Tom Brady be able to sell 50,000 superfan tokens? Yeah. So what happens if Tom Brady sells 50,000 superfan tokens and then goes through a divorce and decides to issue another 50,000 superfan tokens in the divorce secretly, but doesn't tell anybody, and then dilutes the value of the first 50,000 superfan tokens? Do you have cause of action as an early securities holder, right? And are you protected? And does Tom, by the way, there's a joke in the software business, right? And the old joke when I got into business was, what's the difference between a software salesperson and a used car salesperson? And the joke was, well, a used car salesman knows when they're lying. Okay. And you could apply the same joke in the crypto industry. You could say, what's the difference between a crypto promoter and a used car salesperson? Well, at least the used car salesman knows when they're lying. Okay, when Tom Brady issues the 50,000 Tom Brady tokens, and then he issues another 25,000, does he know enough to realize that that was inappropriate? Right? Right? Is it clear that for example, if Tom Brady says, you get to join my super chat group and show up to my barbecue once a year, and you get all these special privileges, and then if he changes the privileges after the fact and the token crashes, is that a securities law transgression, right? Is he allowed to do that? You see, securities law is like for him, I can't tell you, like if you said, ask me about MicroStrategy, I can't tell you how many shares there are, and then a month later change the answer secretly, right? That's why everything is done via a disclosure, an 8K, a 10K, right? Because you want to be very precise. If you were to ask me a very precise number and I accidentally gave you a number which was 10% off, and then you traded on it and then you lost money, right? You would claim I misled you. So if we want these digital token industries or digital securities industries to be resolved, we need two things. One, you need a taxonomy, a definition of what they are where people agree. And then B, you need to get over the political resistance, because there are disenfranchised groups. There are some people that don't want you. They don't want to lose custody. Who's custodying the $100 trillion of equity assets right now that are security, right? Yeah. Not you, not the crypto industry. So I think that ultimately what's clear is this: you're not going to get that progressive digital assets framework from the regulators. 2 years ago, I couldn't have told you that. Like 2 years ago, Ron, it was unclear whether you would or you would not. But I think now in the last 12 months, I think we can see we're not going to get a bulletin which says, here's all the digital assets and here's what you do with them. I think that's probably because the regulators have concluded this is way too politically difficult a topic. So this is going to have to be a legislation, and it's going to have to be offered by politicians, and it's going to have to be bipartisan accepted legislation. I'll give you an example, right? Like I think stable coins are a cool idea, but clearly there's a faction in government that thinks that control of the currency is more important than availability of the currency.
Sure.
The argument in favor of stablecoin is issue hundreds of billions of it, and the United States dollar becomes the world reserve currency in South America, Africa, Asia, everywhere, and everybody uses the dollar. That's the argument in favor of it. The argument against it is issue that much currency and let it circulate non-KYC, then everybody's going to have access to the dollar, and we don't want everybody to have access to the dollar, right? There are certain people that we don't want to have the dollar, the people on the sanctions list. So that's a debate just as politically charged as the debate over a war, right? Should we be in the war or not in the war, right? And so if you're on the wrong side of the debate,
that's going to take years to resolve. I mean, if you're leaving it in the hands of Congress and the regulators, I mean, that's going to take. You're talking about years and years and years to resolve these things. Yeah.
So I painted an idealistic future. Then we've rolled forward over the last 2 years to see that there doesn't seem to be, there's no legitimate path to issue tokens, currencies, and securities to trade on digital exchanges in the United States. And we can see that the US regulators are driving the tone across the rest of the Western world. And so now you step back and you say, okay, well, look, I liked online gambling. I thought it's nice to play blackjack online and trade sports, and it was nice. I liked it. But the point is, it was taken away from you. Now the question is, as an investor or as an actor, what are you going to do? So everybody has to make their own decision. And if you're a retail investor in another country, look, if you are a retail investor in a war zone, right? If you're fleeing a war zone and there's chaos and anarchy, you might come to a conclusion that's different than if you're an institutional investor in New York City. So if you're an institutional investor in the United States and you looked at this entire thing and said, okay, well, what's the best investment? The answer is I should buy Bitcoin. It's undervalued. It's going up by a factor of 10 because it is not controversial, right? What's the use case of Bitcoin? It's universal store of value, right? That people talk about. I'm just going to focus on this. This is a big idea, Ron. Probably the biggest point I'm going to make on this podcast today. People talk about Bitcoin as the separation of money from state. That's not the biggest idea. The biggest idea of Bitcoin is separation of property from earth. The big idea is there's $950 trillion worth of wealth. There's $350 trillion worth of real estate property. A lot of the excess capital, what we'll call money, but it becomes capital, has flowed into property. We have monetized stocks, but we've monetized buildings, we've monetized commercial and residential real estate, we've monetized collectibles and art. And so the big idea with Bitcoin is instead of actually buying $1 billion building in the middle of a city, buy $1 billion of Bitcoin because the maintenance cost is lower. You can move it to any city on earth. The property tax on the building is clear and is going up, whereas the property tax on Bitcoin is zero and it's probably going down because it's very difficult to tax property in the form of a digital asset, right? It's very easy to tax your building, your warehouse, your house, and you can see that. So if you're an investor, you would say, Bitcoin has a massive appeal. I mean, there's no reason why it shouldn't go from where it is today, from a $500 billion asset to demonetize all of gold. I've talked about that before. That takes it up by a factor of 20. But really, most rich people in the world, they don't have their money in gold. Gold doesn't generate yield, right? Gold is a dead rock. Most rich people in the world, wealthy people, they own property. They own city blocks in London. They own warehouses and strip malls and hundreds of thousands of acres, and they own skyscrapers. And why do they own it? Because they have to convert their capital into a property asset which the government cannot print more of. And let's look right now, since MicroStrategy entered the Bitcoin space on August 10th of 2020, here's what's happened to asset classes. Bitcoin is up 118%. I'm reading off my screen right now, but this is pretty close. The S&P index is up 30%. So Bitcoin has outperformed the S&P by a factor of 4. NASDAQ is up 25%. Gold is down 3.5%. Gold is dead money. It has not gotten any boost. Silver is even worse. It's down 16%. And bonds are a disaster. They're down 19%. MicroStrategy stock is up 131%. We are actually outperforming Bitcoin, right? With all the volatility, regardless of, even though we bought Bitcoin at 60,000, 50,000, 40,000, it doesn't matter. What matters is the world's strongest asset class, as a monetary inflation hedge, the apex property of the human race is Bitcoin in the last 2.5 years. It's Bitcoin the past 5 years, Bitcoin the past 8 years, Bitcoin the past 10 years. And theoretically, I won't drag you through it, but we could spend an hour during which I would explain to you, or I would enumerate the 100 reasons Bitcoin is superior to real estate, superior to equity, superior to gold, superior to silver, superior to credit, superior to corporate debt, sovereign debt, and every derivative idea you have. So if you're an investor, and you simply want to make money, and you want to do it without waging a battle with regulators, then you buy Bitcoin, because at some point, governments figure it out, institutional investors figure it out, big corporations figure it out. There's an avalanche of money. The liquidity's dried up, and you can't short Bitcoin anymore.
Why haven't they figured it out yet? I mean, you've been out there telling people this. We've been out there telling people this for years. Why do you think they haven't figured it out yet? To us, it seems so obvious. But I often stood up at night and I think to myself, maybe I've drunk the Kool-Aid. What's the counter argument to this? What is the reason why somebody wouldn't add it to their portfolio? Why hasn't there been a mass addition to portfolios? The reason I ask that is because in 2017, you could have argued, okay, we don't have the infrastructure. People don't trust the custodians. There's no on-ramps and off-ramps, et cetera, et cetera. But now we're in 2023. Like, those things all exist. The narrative that we have been driving, and I think you've done a great job driving it, has been amazing. Why hasn't the penny dropped yet?
Well, two answers to that. First of all, they are figuring it out. The actual return on Bitcoin on an annual basis is running north of 40%, right? It's quadruple the next best thing, right? And if you're staring in 2020 at finding a non-sovereign store of value bearer instrument, and you're choosing between gold and Bitcoin, gold is down 4%, Bitcoin is up 120%. So you could argue that that's pretty much figuring it out. They're figuring out at the fastest rate they can, and it's hard to go much faster. Now, I think what's holding back the market from even going faster is a couple of things. First of all, the asset class is embryonic, which meant that it has had prejudicial and toxic regulatory treatment. For example, the accounting is toxic. Indefinite intangible accounting is pretty much the accounting treatment you would put on anything you didn't want anyone to buy, right?
Yes.
Because what it says is you can only take losses. You can never take gains. There will never be an investment gain. There will only be investment losses. And if Apple stock had that same accounting treatment, Warren Buffett never would have bought Apple stock, right? And Berkshire Hathaway. So the accounting has been a bit prejudicial.
Is that about to change? Is that I know that there is an effort to change the accounting rules. I know that you've come out in support of that effort to change the accounting rules. Is there any kind of reality under which that changes pretty soon? Because that's a massive barrier, and we've seen it.
It's a huge barrier for any publicly traded company and anybody that delivers balance sheet and P&Ls based on GAAP accounting. Yeah, so we've been working on this for 3 years. And FASB took it up as an issue, and it's been a project, and they've been moving forward with it. And the latest, and the community and FASB has overwhelmingly come to the determination that the proper accounting is fair value accounting. Fair value accounting means that you'll be able to take investment gains when Bitcoin trades up, and then you'll have investment loss when it trades down, and will be separate from your P&L and your operating results. So that is good. And that will be very supportive. We expect that toward the end of this year. Like I've heard a lot of people forecasting that might go into effect by the fourth quarter. And so I think that when we go into 2024, one of the bullish factors driving Bitcoin is that accounting.
What is the next hurdle? So FASB support the hurdle. What has to happen in order for it to become the standard?
Yeah. So, when you say for what to become the standard?
For the new type of accounting where you can write it up and write it down.
FASB actually is the body that actually provides accounting guidance. So when they provide definitive guidance, then all of the public companies, all companies reporting GAAP financials will start to adopt that over some period of time, but maybe immediately.
But isn't that the biggest?
What I'm saying is by 2020, I'm answering your question. By 2024, we expect that probably that new accounting practice will go into place as of now.
Isn't that the biggest thing that could happen to Bitcoin? Because I think to me, that sounds like it's the biggest barrier to getting companies to get Bitcoin on their balance sheet.
Yeah. I mean, it's a pretty big deal. If you're the CFO of Facebook or Microsoft, and someone says you should buy Bitcoin, it's toxic to your P&L and it's toxic to your balance sheet. For example, if you were to buy $10 billion of Bitcoin and it traded down 50% and then traded up by a factor of 10, you would be showing $5 billion on your balance sheet, even though you have $100 billion. And then if you made $5 billion a year in your core business, you would be reporting that you made nothing, right? You would be reporting that the core business lost money or made nothing, and that you somehow lost $5 billion, and so the balance sheet wouldn't be right. The P&L wouldn't be right. All your investors would think that you screwed up the core business. They'd be angry at you. They'd probably call for your head. And so the opposite is, if you have fair value accounting, you would buy the Bitcoin. If it traded down 5 billion, you would say, well, our core business made 5 billion this quarter, but we had a $5 billion investment loss. And then the next quarter, you'd say, well, the core business made another 5 billion, but we just had a $5 billion investment gain. Yeah. And then, 36 months later, you'd say, well, the core business is chugging along stably, and we have a $100 billion investment gain, and we have double the assets. And so you can see that would make a big difference. Now, there's another point that I'd make here, which is simply having comfort in Bitcoin as an asset. And this is something that everybody in the crypto industry could do to help, that's beneficial to them and to the world, which is when the public thinks that there's no difference between FTT token and Terra Luna token and Bitcoin, if they're all equated as morally equivalent and technically equivalent and economically equivalent, then you have 25,000 cryptos and hundreds of other tokens. And so the confusion of separating the difference between BTC and FTT is pretty important. If a CFO of Facebook, if they see that the entire world says, okay, Bitcoin is an asset without an issuer, then the next question is, well, can I trust it with $10 billion? Okay, here's two answers. Well, Bitcoin is no different than every other crypto, and Bitcoin is not environmentally friendly, and the energy is wasted, and so you should buy FTT token. Okay, that creates anxiety and confusion, and there's no way that the CFO of Microsoft is going to buy a $10 billion crypto token that's one of 10,000 that's backed by a team of 3 people. So that just paralyzes the industry. Now, there's another answer, which is Bitcoin is backed by 400 exahash and 12.5 gigawatts of power. And that means that if the AIs took over every computer on Earth and they used every computer in the AWS network and every iPhone to attack Bitcoin, they couldn't dent it. It wouldn't even be 5% of the hash rate. You would need all the electricity on Earth, all the money on Earth, all the computers on the Earth to slow it down by 10%. And so Bitcoin is backed by the most powerful digital network in the world. It's a nation state resistant, fault tolerant, digital monetary network. And there is no one that controls it, and nobody can change it. No government and nobody, it doesn't matter. In that case, the CFO of Microsoft says, okay, I could probably put $1 billion on that network, right? So there's what we've had in the crypto industry is kind of a divisive, sometimes divisive, confusing debate. And the better debate would be to say, well, that's a digital security, that's a digital token, that's a digital piece of art, that's a digital currency, this is a digital commodity. And once you've done that, then instead of saying, well, I could just basically be a better Bitcoin, but I don't need to use any electricity at all, and I can gen that up. The problem with that one is you start with FTT token, and then you have Luna token, and then you have Yoyodyne token, and pretty soon when you've got 19,000 different tokens and they're all fighting with each other, you're not going to get the CFO of Microsoft and Amazon and Facebook to put $10 billion on the network. And actually, what should happen next is if you're Apple and you have $100 billion of capital, and you should actually buy $100 billion of Bitcoin which will go up 20, 30% a year, such that you have endowed your corporation, you benefited the world, you benefited Bitcoin, you benefited the crypto ecosystem, you benefited your shareholders. For that to happen, they have to conclude that that this network is indestructible, immortal, right? Secure, incorruptible. And so as people start to get clarity, if they start to understand what Bitcoin is and what a great digital commodity network is, then you're actually going to have 10x more capital flow and then 100x more capital flow. And then the entire crypto ecosystem goes from being $1 trillion thing to $100 trillion thing. When there's $100 trillion of capital, then the utility of every other idea, self-custody, digital exchange, smart contracts, all these other ideas, the utility goes up by a factor of 100. Now we're still in this issue of a debate about whether I want to allow your DeFi exchange to trade derivatives, perpetual swaps and derivative contracts on Saturday afternoon at the speed of light, 1,000 times quicker and cheaper and transparent. It's a good idea. It's just going to be a political fight. And maybe in the UAE, they'll let you do it. And maybe in some other European country, they won't let you do it. And that battle goes on for the future of the financial system.
Yeah. Mark, listen, we're out of time, man. I could carry on talking to you for hours, man, but I love your ideas and I love the way you think so deeply about it. But today we're absolutely out of time. I just want to thank you again on behalf of the fam. It's always good to chat to you. And much love from the Banter fam, and we'll see you again soon. I've got a whole list of things I wanted to talk to you about, but we got to the first couple.
We have an excuse to meet again.
We have an excuse to meet again. Mike, thanks a lot, my friend. Thank you so much.
Thank you for having me.
And to the Banter fam, just remember that our Friday Banters are brought to you by NordVPN. And if you haven't already got a VPN, there's a link below. Get yourself a NordVPN. For $3.35 a month, you protect your IP address. You surf absolutely anonymously. And you make sure you're not sharing your IP address, which is your location, with exchanges, DeFi protocols, and everything else. Listen, guys, I'm going to go and hop onto our spaces. You can go and hop onto it. It's on Mario Norfolk Spaces. I'll see you again on Monday. Until then, trade well, my friends.